Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market moved to new highs this week, and then stopped abruptly and headed south. Monday, the markets were closed, and we saw the futures move up as China cut their interest rates, as there was more fears about the very fast slowdown happening there based on the coronavirus. Japan, they reported their GDP plunged. The number was a minus 6.3%. You can blame that on Abenomics, the ridiculous policies that they have there that now have raised their sales tax again up to 10%. And of course, they were hit by typhoons, and they're blaming that on the typhoon. It's just absolutely stupid. They are certain to be in recessions because the effects of the coronavirus and the slowdown in Asia is not reflected in that number. And we're going to get that in the next report. They absolutely are in a recession, and that is a lot of problems for, well, the world. We have a huge slowdown in China. We have a huge slowdown in Japan. Those are the number 2 and 3 economies in the whole world. Tuesday, Apple come out, and they can't cut their guidance. The market fell really sharply, but then rebounded as buyers do want to come back in, assuming that they can look beyond everything, including excessive valuations. Market ended up Tuesday with only a small loss. Wednesday, we saw the markets get news of a PPI that was up 0.5%, so inflation heating up. Year over year, though, was only 2.1%. Core rate up 0.4%. And the market moved up as they were moving towards the FOMC minutes, expecting to get some, kind of calming voice out of the FOMC because they're always ready to put money in to the economy. They basically said that their policy was on hold, but did mention the COVID fears many times in those minutes. The market didn't react favorably to that and began to pull back after that news. But Thursday was the day of big volatility. Markets rallied, seemingly as they always do early in the day, for a couple of hours to the upside. And then the markets hit an air pocket that almost nobody could explain. S&P's falling quickly, some 50 points from their highs. And traders were stunned by that as the markets just kind of out of nowhere took a hit. They rebounded the rest of the day, and S&P's only finished down about 19 points, and nobody had a clue why. It seemed to me, based on me always looking at news, the news junkie I am, that this coincided with some news that China was going to add a record amount of stimulus. 5 trillion yuan, that's $725 billion. That's a record in 1 month. Things must be absolutely horrible in China. And you want to know a statistic that sounds pretty horrible? Well, their country is basically shut down. Car sales, they plunged 92%. Unbelievable. So as much as they tried to soft step what's going on there, it's really horrible. And again, we're looking at the number 2 and number 3 economies in the world absolutely pulling back like crazy. Friday, well, you think it's only in Asia? The U.S. came out with their PMI numbers, Purchasing Manager Index. 49.4%. That represents a contraction that was estimated to be 53.4%. The bond market exploded and the stock market headed lower again. Maybe the markets are actually susceptible to bad news now, which they seem that they never were. Other news that came out is South Korea seems to be a hotspot for COVID-19, as the number of cases there has now picked up to 204. And the markets just are reacting in a way that shows money flow really changing. The bond market soars on that news. The dollar collapses on the lower interest rates, and gold takes off on the upside again, moving up through resistances. I think that there's a paradigm change going on in here. Markets seem to be shifting. Money flow seems to be shifting right now as the money is moving very swiftly into gold and silver and into bonds, with the 30-year at a record low. That's, remember the crisis that we had 10, 11 years ago? Well, we're at crisis levels. The problem is that these central banks, they can't keep printing money out of midair without its value collapsing. And China is just in this huge printing mode. Japan in recession, China collapsing, the U.S. now at a negative PMI. That's the three biggest economies in the world, all retreating. This all means more stimulus, more pushing on a string, more central bank nonsense going on, and the result is that, well, the money is flowing in a different direction. Gold and silver getting bid, and they could be going up significantly more. Watch my big picture analysis video that I did on Thursday on gold and silver, looking at the metals and the mining stocks, and also put a little bonus in there looking at Bitcoin. I addressed the question, is it time to buy these gold stocks, gold and silver metals, or maybe wait? We talk about some timing things in there, but certainly the direction is up. This change in money flow, I think, is a real key with the bonds moving the way they are. The low in the 10-year now is very quickly approaching the low we had 11 years ago also. And with what's going on right now, well, the money is still moving into the U.S., and that's what's been moving in stocks, well, up until this morning, as even U.S. stocks have been a haven bid. When they have all these other economies doing so poorly, then money moving into this direction. However, with these negative PMI numbers, to me, it really looks like it's over. We made it up close to 3,400 on the S&P. I don't really think there's any more to go. And I think that money is soon to move out of stocks in a very dramatic way, and into gold, into silver, into bonds, all of those accelerating. And maybe what's coming soon is a commodity surge sometime. I'm looking at all the timing in these things, and it looks to me like sometime after because we get into the springtime, as we get past the winter, there's some alignments to get some pretty good upsides in commodities. And that makes sense when they have completely depreciated the value of all these paper currencies. And you can see it as we see this move up in the gold market, in the silver market, and in the bond market. So all of those things happening out of the stock market. Our call was for a decline of some 8 to 12% coming in a correction this year. If it wasn't an election year, I'd be looking for full-out bear market in here. I think that's going to hold it together, but we're looking for two waves, a wave to the downside into March, and then another wave into the summer on the downside, which we think will be into June, July. That should likely be that 12% or so decline in the stock market. Things just, to me, look like they're changing very significantly. Stocks down about 1.5% for the week here at midday, and pretty much all the indexes pulling back at this point. Bond market, 30-year gains 2 3/4 points to this point, a record low 1.9%, 10-year yields down to 1.46%, getting down very close to those record lows, And this is those crisis records on the downside. 6 month to 2 year yield curve inverted, and the Fed is going to try to do everything to fight that inversion if they can. So don't be surprised if they start doing things to push down the short end again, because they don't want this inversion to scare the markets, because if you scare the markets, then you break the whole game that they're playing on everybody, where they try to make you feel richer because the asset prices go up, and then maybe that holds everything together until, well, economic growth brings the ability to pay back all that debt. I'm laughing at that possibility. Unbelievable, the mindset of these guys that run our economy. Well, we saw the dollar move up small for the week. It moved up big and then down big on a big reversal here on Friday on those PMI numbers. Oil's up about 50% on the week. Momentum in there is slightly improving. I'm going to show you that as we get to the short-term view, and there will be some very nice-looking things to talk about in there as we get towards the end of the show. Lots of great stuff to show you here as we move on into other parts of this show. Follow me on Twitter at askSlim. Become a YouTube subscriber. We've got a lot of videos and a lot of analysis we're putting out there on YouTube. And if you follow us on there, you're going to be able to be privy of these little snippets that we're putting out there. We have RV doing a great job now picking up on some of the video production, and he's going to do a ton more of that going forward. Matt, of course, doing a spectacular job on the stock index report and the ETF report, and putting out the stuff every single morning for the live view of our stock index report. Daily information, you got to see that. It's incredible. So we have a free preview going on that right now, so become a free member and you'll be able to preview that. Follow me on Twitter, askSlim, YouTube, become a subscriber, and I'm so excited about everything that we have going on right now, and I'm going to show you more of that as we move forward in the markets. Now we're going to move, however, to the best and the worst stocks for the week. The best stock for the week is Dominos, and I have been critical of the valuations in Dominos over the years, and it's been, one of the higher priced restaurant stocks out there, and you could see that valuation was really stopping it. Look at that resistance zone. You're looking at cycle analysis, and these are the cycle brackets on the bottom right here. They show you the average length between lows. That's how cycles are measured, and you can see the perfect rhythms in here. This may be a week or two past the expected bottoming period on a bullish configuration. I would have never guessed it would blast in one day all the way up through that peak area at about in the 305, 307 area. Look what it did, 27% on this week on the upside. So if you look here, this is 1-2 weeks into the rally period, right? If you look here, this was a 5-week rally in a bearish cycle, 6-week rally in a bearish cycle. This was about a 5-week rally in a bearish cycle and then moved sideways. And here you're only 2 weeks on the upside. So that's why we have it projected up to that projection up there, the 161.8. The stock probably makes around 398 to low 400s before it then rolls over. Earnings estimates for the year are 1070. That again puts it at a 36 PE and the most expensive restaurant stock out there. That is, a reason for caution, and just that if we get another few weeks up to that level, I think it's a sell up there between 390 and 410, and I would think that investors would see that this stock has gotten crazy and that it's not only overpriced, but see this 34-week moving average when it gets well away from that. At some point, it's going to come back down to it. Now, this is going to be moving up this way, and the price probably moving down. So this is really like a magnet, and I could see the stock only moving up a couple more weeks and then down again. Now we're going to move into other stocks. SEDG. This is a stock that, exploded to the upside. Now, solar stocks have just been moving up very significantly. A lot of buying coming in, and then today that changed a little bit as First Solar came out and got hammered. So First Solar, one of the worst stocks of the week, and the rest of the group really good. Look at this stock, Solar Edge, as it moves up to that 100% fib extension. Now, again, this is a stock that is very extended on the upside. They have real earnings, and some of these stocks don't in this group, and you can see that. Maybe a 32 forward PE on a stock like this isn't all that excessive, but I still would wait for a better buying opportunity in there. There has been a buying panic going on in these solar stocks. SunPower up 11% on the week. That pattern is okay. FSLR, Vivint, up about 8% on the week, and that pattern, that's still, I would say, extreme when I look at that. And that company loses money and makes another gain. I think it's too late to buy that one. I'll show you First Solar in the worst of the week, down 7%. And CSIQ is about unchanged on the week. I think CSIQ is a buy between 21 and 22, and that will be setting up in the next few weeks, I think. So that probably is my favorite one right now, to be looking for a little bit more pullback, a little bit more time, and then buying it. Take a look at this. ETFC. Morgan Stanley decides to pay $13 billion for this stock. You could see the cycle rhythms on the bottom. They're not absolutely perfect, but that was a pretty good spot for that stock to move up. I would have never guessed that anybody would buy them out for $13 billion. You might say, if they're buying them out, why has the stock come down from 57 all the way to 53 here? Well, this is not for sure, because there's already talk of the government stepping in the way of this one. They're very concerned about competition and the consolidation going on in the industry. And this, that's why it's not just absolutely taking off in a huge way on the upside. And this stock could give some more ground in here. There's a question about whether or not that'll go up. It's up about 20% on the week, just an absolutely huge gain. And now we're going to look at some gold and silver stocks, or talk about them. Anyway, I'll show you one. This is AU. This shows you what are called harmonic families. Right on here, where you have dominant pattern and you have minor patterns, and they're pretty clear. This is the GDX index, and you can see it almost perfectly tracks the GDX. Of course, the golds all move together based on the principle of synchronicity. So that upside move right over there is nicely on time on this minor pattern here. We are projecting for this stock to get up to this level, about $25.50 right there, maybe $26 sometime in the next several weeks. Of course, gold and silver taking off. And again, I want you to watch I look at 17 gold and silver stocks in the video that I just did on Thursday in big picture analysis. Please do go watch that video. You'll get a good sense for how I would want to time most of the group in here as we get this big gain. PAAS, Pan America Silver, up 13%. I've got a target of 26 in there. Goldcorp, GOLD, up 12% on the week. I've got a target of 23 in there. And Newmont up about 11% on the week. I think that one is a bit frothy. I don't really see a lot more potential on the upside right now in there, though when you have this buying going on in gold and silver, nothing has to stop. They could run through everything that we see on the upside. A very, very positive group. It's just a matter of, if you're a long-term holder, do you want to add right now, or do you want to wait and add at a different time? And that's the question we really entertain. Also, in that video, we analyze Bitcoin, and you will hear my very bearish comments in there. All right, so that's a look at the gold stocks. Now we're going to move over and look at some of the worst stocks for the week. And that's not what I wanted to show you. I want to stay right over here. I'm going to come back and show you that in a moment, and then you'll be able to see that. So in the worst stocks of the week, we're going to look at FLOR, FLR. This stock has been in meltdown. It's lost 75% of its value over the last year that you can see in here. It's just an absolute meltdown. And I want you to note that the cycle patterns told you this. every single one of them. This is called a negatively configured cycle. It breaks underneath this support, and then this whole period is a decline, as you can see right in here. It did the same thing right over here. Now, it didn't have a lot of time left to decline, but each of these rally into the sell zone. You can see that this one, it couldn't even get past this lower sell zone number here, and then moved down to a lower low. The stock very likely to move down towards this $10, $11 area. The news out on this one, well, the guidance was lower. They have some big charges coming, and the SEC has opened up on floor an investigation regarding their accounting practices. So this stock under huge pressure. I mean, it was a sell all the way down in here. You can see that. And each time the momentum turned negative here, you got whacked. You can see that. Here's where the momentum turned negative, whacked. Momentum negative, whacked. Momentum negative. Well, there was 2 rounds of that, right there and right there. And we're likely to see another 4 to 6 weeks on the downside. Really think 11 is a pretty good possibility in there, in floor. Pretty horrible when you look at that. Analysts downgrading the stock. Next, we're going to look at Devon, DVN, or you might call it Devon. This one is a stock. Now, what is going on there? We have this buffering going on, and it looks like it's going to come to life. There it is. Okay, so when you look at this pattern, there's really not much that I can say that isn't extremely visible to you, right? Stock has been moving down. You can see that. And you can see that the pattern that it's in right now is ending. In other words, that declining phase is ending. Again, we're looking at what happens when momentum turns negative, as it did right over here, as it did right over here. This one it did right over here and had kind of a double dip on some news. And now it turned negative over here. Now, each one of these is where the cycle bottom comes. You can see that right there and right there and right there. How do you like that? Because each one of those brings a rally. And this one is what we call a basing cycle, where it's gone up and it comes down most of the way. And if it can hold above this level at 1972, which it's now about $1.40 from, and then turn up, it will have completed the base. So this to me is an investable, buyable stock when I look at that, because I think that the low is going to come in pretty soon. And you know my comments about commodities pretty soon. Well, these energy stocks are commodity stocks, and even if oil doesn't go up much, and I think it's going to go up a couple bucks, these stocks in the energy category can do pretty well, and I'm seeing more and more of them forming patterns that might be a bottom pretty soon. So Devon loses 10% on the week. Earnings beat. Analysts have downgraded it based on falling revenues, and we see this bottom coming in. Another stock, similar stock in the category, Marathon, MRO. That one down 10% on the week also, and the same thing. We see a bottom forming in that pretty soon. The next thing we're going to look at is the chip equipment makers. KLAC is what we're looking at right here. These have been monstrous stocks. Now, what we have going on here is problematic. And here I'll show you. So here you have this beautiful rising cycle. It's pretty close to a basing cycle. And then you have this unbelievably long rise and minor decline. You can see that. Well, when you move up the cycle 80 or 90% of the time, you only have a little time to fall. That's what happened here. You get into the next rally and it only barely takes it out and rejects, and see the gap on the downside in here. Now this really looks like it rolled over and pretty close to a double top. Here's your low right here. It's given up 70% of that advance already, coming down into what would be the upper buy zone, but now this upper buy zone is failing, so we'll be removing that, and it looks to me like the stock has peaked. Now look here as the momentum turns over right there, and that could be a signal the stock is going to decline all the way out here into May. I don't like this at all. There was a report that came out that also affected Teradyne and Lam Research, those stocks both moving to the downside, 6 and 8% respectively. The report is that U.S. could restrict chip equipment sales into China. And they all look like they've topped to me in this group. So CLAC, I think it's a sell. And you can see it now approaching down towards a 34-week moving average. It could get some support right in there. But if it breaks this level right over here, and I'm just going to remove that upper support message right over there because it really belongs over at this point. Then what would happen if you get underneath this level right over here? That's that cycle low that you can see. It will be a breakdown, and that breakdown will signal significant declines potentially ahead. So KLA 10 core, we're going to rate it a sell and look for significantly lower prices in there. Teradyne, Lam Research, all of those smoking stocks that I think are done. American Airlines, AAL. Well, these airline stocks have been really taking it in here based on the coronavirus and people not wanting to travel internationally. Now, you can see this really looks like a bottom forming to us, and note our projections right in here. There's that slightly rising directional component reflected in that upward channel, and it's pulling back right now. You can see right over here. You get any whiff of anything where the coronavirus is slowing down and they try to bring you that, you get these upward pops, as you can see. I think American Airlines is a buy. And I think that you're going to get an opportunity to get up to the top of this channel towards 33 again. Of course, if it gets under this low, that's over with around 25.5. That's 2 points down from here. So I don't think that's going to happen. I think you're getting a buying opportunity. And I like the stock, which loses about 9% on the week on those fears. And we think it's a buy to move up to around 32 to 33 area. SAVE, Spirit Airlines, also down 8.5%. And it's in that, we think it falls down to the 38 to 40 level in SAVE, and that it has a good shot at moving up towards 50 after that. So those are my two favorite stocks in the airline category. And the last stock we're going to look at in the worst of the week, FSLR. You can see that right there. This is amazing. It keeps hitting that sell zone right over there and then failing. As much as we've had bullish, really bullish things that we were showing in the other solar stocks, this one has not looked that way. And we've had that fib extension target zone in there for many, many weeks, and it points to sub 45, and that's where we think it's going. Acting opposite the group, it looks like it declines into late March. 45 the target. It had a fourth quarter loss and a sales miss, and analysts are not liking that at all, and neither are we. Remember, I said CSIQ looks like a much better opportunity to me, and that's the one I'd be looking at. Now, most of them have similar timing to this, where they could get pullbacks for the next month or so. If you like First Solar, look for it to get to that target zone before you come in. I do think that money flow has moved into this group in a way that is just starting, and First Solar could have its day again, but not yet. I don't think this is the time to be buying the stock. It violated on the downside, and we're looking for lower prices in there. And that is the best and worst stocks for the week. I hope there was something in there of interest that can help you in your trading and investing. So now what I'm going to do is just bring you a quick look at our level 3 trial, which is available to you right now. And let's talk about that. I gave you a little quick flash of this a moment ago. Level 3 is just an incredibly comprehensive and valuable for the active trader investor. This gives you so much information, but the real focus I want to show you right now is on our trade ideas. We have changed this now for the last couple of months, and we have done 74 trade ideas in the last couple of months. They are phenomenally powerful, phenomenally great. When you get 2 to 1, positive versus negative, that is just beyond what I think you're going to get from any other analyst. And what we do is different. I mean, we're not giving you trades. We're not saying buy this at this price and sell this at this price. We bring you the whole analysis. We let you see the reason why we like something or don't like something. We show you the entry ranges and the exit ranges, or targets that we have, and we judge them by how close they get to the entry, and then how they do regarding the projections that we have in there. And we want you to apply this analysis to your own trading plan. This is built around cycle analysis, projections, momentum, key support resistance levels, and it's all to improve your entries, exits, and overall results. You just apply all of your own work to it. You look at it, make sure how it fits you, apply your own trading strategies. We don't give you a trading strategy to do. That's because they're yours. It has to fit into what you do. Holding periods for these are generally 3 weeks plus. Occasionally, the holding periods are shorter because they work so quickly. And it has just been great. We've gotten great emails and comments from people on how good these ideas are. And the ones that are not good, well, as soon as they get into the area to look at them again and say that they're not good, we do that and we tell you about that. So just when analysis is great, we tell you that. When analysis is not, well, we give you that also. Let's take a quick look at what we do when we do a trading idea. You'll see right in here that this one was put on January 28th. Goldman Sachs short. We thought it would be for 3 to 8 weeks, and it's a counter trend. Signs of topping in the stock. Well, if you look at the stock, you'll see that the stock has been moving to the downside. So it's satisfied our entry, and it's satisfied hitting the projection zone. And we give you the technical briefing right in here to tell you why we think this is a good entry. And in this case, it was a good entry, and it was satisfied. So it gives you an idea. I'm going to show you another couple that worked pretty well. Here is gold, GLD. You can see that. That was a long position put on January 24th right there. And it became inactive. In other words, we pulled it and said, well, it's met our objectives on February 21st. So this one was held for almost 4 weeks. This was a trend continuation momentum trade. In other words, we saw the upside trend. It was in a consolidation. We saw that it was likely to continue on the upside, and it did. You can see it hit our projection zones. We had a revaluation level, in other words, where this fails, and when that happens, we let you know. And this was a good one. Again, the technical briefing tells you what we thought in here on GLD, and that worked well. One more that worked, you can see here recently. This one is silver, and this is silver futures. So we also do this on futures. It was a long side trade. You know what silver is doing now. It's exploding to the upside. It already made our upside projections right in there. Now, even though it made it, it doesn't mean it's a short or doesn't mean it's an exit. It's how it fits you and your type of trading. And if it would have gotten below 1724, we would have reevaluated it, but it didn't. You can see here weekly cycle analysis suggests silver is due for a mid-cycle low. In other words, it was consolidating, and that meant it was going to reverse to the upside at the cycle timing level. And time and price is what we look at. So we projected it up to move into mid-February, and that's what it was doing. Weekly momentum in there was negative. That was something that was against the trade, but still some of the evidence said that this trade was likely to move to the upside because of formation of a short-term low. So it was all following exactly what we thought and was great. The next one is one that failed right over there. And we're having about 1/3 of our trade ideas fail, which is phenomenal. I'll take that anytime. Home Depot short an intermediate 3 to 8 weeks. It was a counter trend. There were signs of topping in the stock, except for one thing. It didn't top. It kept moving on the upside, and this ended up to be a failed trade. It had a daily close above this level. We were going to warn you about it and reevaluate, and that's what we did. Here it suggested that it would be making a top, an intermediate cycle high, but it has extended even further to the upside. So that one was a failure. And as I say, we're getting 2-to-1 positive which is phenomenal. That's a look at what you're going to get in level 3 on trade ideas. But look at this. It also includes our Stimulator rankings program, all of our work on the 48 best traded symbols. Look what we have here on Apple. Okay, so the directional bias is bullish. The technical analysis favors the long side bias for the next 3 to 6 weeks. You can, click on these and you can shuffle these up. But you can see on Apple, positive long-term, positive intermediate, positive short, option bias indicator P3, phenomenally strong in there. And if you click on these, you can see my work on the cycle charts that will open up for you. That's all included in this level 3. You can see that on key stocks, and you can also see that on key futures, because we do the futures also. So you can see all of that great information. You can click here, get what our trade ideas are also, because that's the kind of information you want to get. This is just an unbelievable rankings program that we have built in here. Yes, it does look like the Stimulator momentum tracker, but this is for 3 to 6 weeks for traders. The momentum tracker is for investors, and the momentum tracker doesn't have our charts with all the work on it because, well, this is a higher levels part of our membership. So you can see it's just great. What do you get? I mean, if you become a level 3 member, everything in level 2, the stock index report daily, the stock index report live stream, you don't need any special platform. You're just going to get our live charts that are showing you the 15-minute charts with our support, resistance, acceleration zones, the incredible reversal scout, which gives you direction. We're just going to show you where the moves could be or where they could stop, and it's going to raise your odds of success. You get over 400 videos that I've produced. You can binge watch that. You'll get Future Speak, Market Week Minutes that takes you exactly to the spot on the symbols that you're interested. The stock index report weekly, the ETF report weekly with the bigger things in there, where we're looking at broader patterns, and of course the momentum tracker for investors, our brand new program, which is just crazy good, and I've shown you that already. All of that membership trial, right to Matt for our special links, everything in level 1, 2, and 3, 1 month, only $48.50 for everything I just showed you. That's absolutely incredible. You'll get half price for the first month and beat the price increases because they're coming. We can't keep giving you all of this for these numbers. So you get in, buy it $48.50, and if you stay on and renew, you're going to renew at these current level prices. No issue about that. That is unbelievable. That is the askSlim Level 3 membership trial. Sign up for that right now. Thanks for watching. And I think that there's an unbelievable amount of information. Who else gives you this solid kind of analysis? Well, I don't really know. And here is our short-term view for the 5 major markets for the coming week. We do this at the every single week, basically, where we look at the short term. And what I try to do is rank myself based on many, many different factors. We're looking out 1 to 3 weeks. We're looking at momentum. We're looking at levels. We're looking at net changes, all of those things. And I do my best to rank myself. This week, we're going to get about a 55 to 60%. We were okay on a lot of them. The bond market, we did very well. But overall, things were a lot stronger than I expected in the dollar, which then came down late in the year. Late in the week, we had the gold market move up much stronger than I had expected. It moved outside of the range, so I only get half credit for that. So this was not a week where I was all that great, but overall the major patterns hold up pretty well. So let's take a look here as I move out of that first solar chart and move over into the daily charts, and then switch this over to light crude /CL. And there is light crude. You can see this big messy chart as I come back in. And we had expected that light crude would rally and then move lower. And that's pretty much what happened. So we get pretty good credit for that. It moved up past the range that we thought it would be in, so we get a little dinger for that. And it's now you can see what looks like a bottoming going on in here. So we have this support zone in here. Momentum, which was quite negative and brought the big break, is now neutralizing. You can see that, so there's an improvement in momentum. What we're looking for is a likely test of this area down over here, right around the support. The middle of the support here is around 52. The bottom of that support's around 51.25 area or so. That's kind of what we're looking for over the next, close to 2 weeks. Maybe the range here of this peak level around 55, the bottom level around 51.25, and that's kind of the range. Decline over the next week, week and a half, rally after that, and be kind of stuck between these support and resistances that you see there. But the sum of the evidence is that it's improving. The intermediate patterns look like they're bottoming, so it's less likely that they test this low over here. We thought that it was possible. And we do think that you can see out here in about 3 weeks or so, a shot up into this area of the resistance zone, right around this 55 area to 56.60 or so, 56.80, which would be a sell zone. We don't think they get much through there. We're just going to look at that range of 55 to 51.25 over these next few weeks. That is a look at light crude. Now we're going to look at the gold market, which is moving up. Right now, gold up about $30 and moving up very, very swiftly. This short-term support buy zone is rising. It's every time we get a higher price in here, that goes up. Momentum, as you can see, moving up and actually widening, so that's really showing you the increased momentum. Look at 1, 2, 3, 4, 5, 6 days in a row of white bars as it moves up like that. Silver really tipped this off because it was moving first. This really big move going on right now that it's basically $80 over these last 6 days. So a big upside move happening in here. We're going to look for upside chop and then pullback in here. Getting down to probably this area of about, that supports at around 1630. The supports here is at around 1615. So that's our buy zone right in here. After this impulse to the upside is over with and it pulls back in here, we're going to look for it to kind of chop around and then move down. A minor dip for about, we'll call it 1 to 1.5 weeks on the downside, hitting into this buy zone over here, and then getting ready to move up again in a significant way. Some of the evidence in here, you can see with this rising upside momentum, is that intermediate targets have been raised. Because the momentum is increasing on the upside, we're now looking at 1680 on the near term, and we think you have to buy the dips in here because I don't think they're going to last very long, and the upside really looks like the right side. That's a look there. Now the dollar index, we were cautioning that when the dollar softened, that if gold was rallying when dollar was rallying, then when the dollar softened, gold would explode. Look at this bar in here. That's a very big down day that you see right there. And we think it has a similarity to this right there, where it's a late move to the downside, probably another couple of days that you get in there, and then an attempt. Now, you can see this screamed up to new highs on that. I'm not allowing for that. I think it's going to potentially test this levels. You have a chance to tickle 100 there. And then come down again, and that this is a topping process going on. It's a bold call by me because this is actually quite a bullish pattern. See, this upside arrow shows you the positive configuration in here. And when that happens, the odds are pretty high it will test that level. It got to 99.91. Maybe it gets back up there to 100, but then I think it rolls over. And this move up over here could be reflective of the pullback that we just talked about potentially in the gold market. But then we think it'll reverse. Dollar down, gold up again big in there. So that's what we see as a top beginning to form in there. We'll look for early down and then a rebound in the week. Momentum, you can see, still quite strong in there. The support around 98.90, that's kind of where we see the dip coming down to, below that 99 level before it then bounces again. Some of the evidence shows that momentum's still up, and there's a pretty good possibility that we are going to get some chopping around in here before this peaking process completes, which is what I think is happening right now. So just some choppy market, another shot at 100, which could bring you the correction that I see in the near term in the metals markets. And boy, if that happens, I think you really buy the metals markets then, for traders, of course. That's it for the dollar. Take a look here at the bond market right here. The bond market, look at that as a rally turns into a giant rally. We saw this triangular shape going on. We commented that this was a corrective period, and when you correct in a triangle, it then releases back in the same direction. We upgraded this on the 24th. We upgraded this on the 31st of January. And now you could see it moves through these prices on the upside right over there. Powerful patterns that we see going on here. Upward bias remains. We see the potential for this to be moving up to that target zone right there, up near 167, 168. Record low yields going on. You see this, you're going to probably get a record low 10-year yield. This is a reflection of a worldwide crisis going on that I think is beyond coronavirus. And what would be the reason for these incredibly low yields? With the bond market essentially now forcing the hand of central banks, which are going to pretty much have to react. I'm calling for 3 cuts by our central bank here for the rest of this year, and nobody thinks that's going to happen. So I think you're going to see a very significantly aggressive central bank in here, and I think that's going to be bad for stocks, not good, and nobody else is saying that either. We're going to look for more choppy upside in here, minor dips. Some of the evidence says that all time frames are really strong on the upside. TNX, the 10-year yields now have a breakdown in there, and the money flow is very significant into the bond market. Remember that a 2.9% yield on the 30-year is still one of the fattest yields you can get in the world. So money flowing in here not only to grab for yield, but also in a haven bid, and this is still going higher. These patterns are excellent, and you can see the bottom right in here that was supposed to form, and what happened just pushed it up in a big way as a new impulse came on the upside. There is more there on the upside coming. It's a very high probability. So we thought that this market would go up, and it certainly did. It broke through that flag that we saw, and it was even stronger than we expected. S&P 500 SPX. Let's get this messy chart blown up in here. We talked about what looked like to us a chance to get up to about 34.03 and then pull back to about 33.48. So what did we do? Well, we got up here to 33.93, so I missed that by about 10 points right there because we saw these fib extension confluences. We thought it would stop there. And right now we made a low in here below my downside target there, but by a little bit, and we're falling very hard right now as we have the S&Ps down 43 points at the moment. And what do I see? Well, you see this pointing to this level right over here around 33.20. You must downgrade that now because look at all the days in here, a whole week. It now comes down to be projected to here just below the 3,300 level and then get another rally again. However, this could get even worse than that and may get into the lower supports down over here around 3250, 3260. So right now we're going to look for this area around 3,300 or a little lower over this next 4 to 6 trading sessions. And don't be surprised if this becomes a bigger free fall than that. This level right over here is the key. If you get below that level, even if you approach it, it would be really bad, and that would be around that 3210 level, 3213. That level right there, can we get that low? Well, it's possible the way they're falling right now. So we're on these 20-day cycle lengths. They look very clear when you see that. So right now we're on around the 15th day or so. So you have another 5 days on the downside likely to come in here. If you get intraday rallies in here, look for them to fail and to move to the downside again. I can't see anything that's going to save what's going on right now. We thought it would; these confluences would hold it, and it didn't quite make it to it, and now we're plunging. So downside is what it looks like to here. Some of the evidence shows all time frames still positive. That means that this modest decline that we're looking at right in here, which is basically 3%, isn't any real damage at this point. I mean, this is still showing us the potential for this to happen again after this decline. The lower this gets in here, the lower these advances are going to project. So we're going to wait and see how low this gets and see where our anchor point is in here. But these next 5 days, they have a lot of risk in it. Now, you can see the slim ribbon starting to roll over, but momentum is still positive in there. So when you have positive momentum and you get an oversold projection oscillator, you tend to get rebounds. You tend to not have a lot of downside. You can see that happened right over here, which was a buy indication. Same thing happened right over here, a buy indication. So this right over here is indicating that the downside is likely limited. You start breaking the supports and get deeper, that's going to change before this turns up. Remember, we look for an upward turn in here before we really get the signal like we had right over here. So we don't have any signal in there right now. All we're doing is indicating that this is slightly oversold. That means it's internally correcting that overbought condition that was in there, and then likely to prevent it from falling in any giant way through there. But until this turns up, there's still a window of decline right in here, and we see that as a risky period over these next 4 to 6 days. As I said, we're going to call this coming week a down week, and then get a rebound, getting down to somewhere around that 3,300 level, and if it gets below there, you still have to start to wonder about that. That is a look at the S&P 500 and a look at, well, all of these amazing markets. I hope that you thought that that was an amazing amount of information. Don't forget to consider becoming a level 3 member. Look at our trial in there and contact Matt at askSlim.com. He'll send you the link. You have any questions about it, he'll answer that for you. And he'll even walk you through the askSlim site if you have any questions, because he's really great at doing that. So do become a askSlim level 3 member. Follow us on Twitter at askSlim, and do become a YouTube subscriber because of all of the great stuff we are putting on there. That's it for this show. I hope that you have found it incredibly informative, and that this information is something that you use to raise your odds of success. You know, you need to be so incredibly careful. It is so crazy out there. And I'm always wishing you great trading.